Hey guys, welcome. It's Ronnie and Dave at Stock Sniper Trading SST. I hope everyone's having an amazing weekend. Guys, I want to break down a trade that we took in live London. It was about 7 scalps on the buy side for US30, where we made almost 230 pips. So I want to break it down with a top-down analysis leading into London, and then how we took that buy. So guys, if you like these videos, hit that like, hit that subscribe button, leave us a comment below. And thank you guys so much for all your support. Almost 37,000 subscribers on YouTube. So we appreciate that. So let's not waste your time. Let's break this down now. Okay. So this is the daily time frame for Dow Jones, US30 daily. So each one of these individual candlesticks is an entire day of trading. So when you look at a top-down analysis, we had this sell-off, then we had this little pullback. We had this little weekly pullback. And then right here, June 24, we had this really nice bullish candle when the market started to rally, but we came up to here and that's it. We started to encounter a lot of supply above us. So they pushed the market down. June 28, June 29 was a little bit of an indecision spin top candle right in the middle, and then June 30. So this is the day that we were trading leading into London. So first of all, it's an ignited daily candle. It started off with no upper wick. So the supply was continuing to push down on the daily. So we're going to put a purple line up here to signify that that's the high of the day. And it's an ignited bearish candle. So number one, when we're looking at structure to the left, what we broke here, we're looking over here. Okay, so this was a real critical area. So I go yellow here to signify another daily area. And so what happened on our daily candle? So we broke these bodies right here. When we lost 30,970 and 30,900 area, we kind of lost this psychological area. And then we started to fill these wicks to the left where we came, we pushed all the way down and we recovered. So this was the volume kind of leading into London market. So where did we come down to? And then we pushed down to here. So this is our daily low right there. That's the daily low. So I go purple. And then if we break like this purple area, possible the daily volume could even drop down to maybe this area over here, 30,200 level. It could possibly come down there, could start to push down. But we see over here, there was good daily demand right over here. We can tell by those 3 bottom wicks where they got rejected. So we do have some daily demand in this area. We're just below 30,000. Okay, so 29,900 level. There was a lot of buying support where we pushed down, but the liquidity was grabbed. It caused us to have this nice little push up here, but we started to get rejected. And now we're kind of consolidating right here in the middle. But we do have some critical areas where we could come down, fill the wick. Maybe we bounce off of here. So let's go down to the hourly candle. Look how this thing is shaping up leading into London. So there was this big drop on June 28, Wall Street market open, where they dropped the market down, consolidated sideways. The hourly candles, they created a little bit of support right over here. So there was some nice hourly support right over here at 30,900 level. And you can see then we started to get choppy inside here. It was breaking out up to here. 31,160 is our hourly resistance right up here. We couldn't break above. So it's kind of consolidating. But now you see we're trending down. We're going back down. So this is now the start of the day. This is June 30, June 29, June 30, leading into the day that we started to trade. So this is the Asian session. So the Asian market was in a trending down momentum, lower lows and lower highs on the hourly. So there's pushing down. Now we're getting into midnight, my time, 12 a.m. Eastern. Here's 1 a.m. Eastern. Okay, so we broke the hourly support. So that's critical. We broke the hourly support. How low did we get down to? We got down to 30,800. Exactly. A nice psychological number for an order block to push the momentum. Then pre-London, 2 a.m. It pushed up, had a rejection wick, and we broke down further. So now this is what we were leading into in London market. So our hourly pre-market low leading into London was 30,650. And then it started to push up over here. So below us, right over here, now we're going back to June 23 to see where we have some nice hourly support. There's hourly support right over here, those bodies. We've got that rejection wick right there, and we stayed below here, and we got these bodies. So 30,615, 600 area. If they dump it another 50 pips, down, they could start to grab that liquidity down here. Okay, so now let's go into the 5-minute candles. This is what we normally do when we're scalping, guys. So we do the top-down analysis walking into the 5-minute candles. So the 5-minute candles, you can see now 1:30 a.m. Eastern, they started to break down. They pulled back up to here, but there was a big rejection here. So there is some 5-minute supply right over here. So we like to draw like a little supply box to signify that there is some supply in the market. They continue to push it down. It held right here where there was a little bit of support created right here, another pullback in the market and continued to push down. So this is resting supply. This is new supply in the market right here. And then we continue to push down. Now we're building one leg up. Okay, so this is one leg up right here, one leg up. So what could happen now at London Market Open is it could peak up here. It could be like a nice impulse break to the high, and maybe they push it back down to grab some liquidity, or it could come back to retest this area and we could go up and move up to this supply area. Okay, so this is now 2:55 a.m. This is when we start when London Market opens up, 3 a.m. Eastern going forward. So I have an hourly support, not 1, and an hourly support 2 down here. So, and then now we look at our RSI indicator too. So we use this to help with confluence, and you can see the market is going low, lower low, lower high, push down, lower low, lower high, push down, lower high. Look at our strength. As the market is moving down, we've got our strength indicator is slowly creeping up. Okay, so our strength indicator is showing a little bit of strength. Okay, our first peak low was about 10-11 on the RSI indicator. Then the next peak low was about 17-18. So you can see as they're dropping the market down, the strength is slowly increasing over here. But we'd like to see a nice like W bottom, maybe one more support pickup, one more area to grab some liquidity. So we do have the body right there. We're consolidating right now inside through here. So this is where they're accumulating pre-London coming in. And now we're going to open up. So I don't want to waste too much of your time, but here is London Market Open, 3 o'clock, 3:05. Okay. I took one impulse buy at the break. I was up, I think it was 6-7 pips right off the bat. I didn't take out any profit, and then it started to go into a little bit of drawdown, but I still held it because I still trusted my top-down analysis from the higher timeframes to see that they could possibly come down here to pick up liquidity. I went in with a low lot feeler, my first trade of the market. So I don't go in heavy with my normal trading size. I go in a little bit smaller to test out how the market is moving. And then I look for possible areas to start maybe accumulating the move. So let me run it through here. Okay, so over here, we saw that, and I held my trade in the drawdown, and I saw it break right here. It broke the hourly support 1. They didn't come down to attempt number 2. That's where we thought it was going to come down to. So then they started to get some 5-minute support in here by the wicks. So I started to add another order. I added another buy in the market. I believe it was this candle. I added a buy, and also the spike up here, I was looking for a pullback in the market to add another position in the market. Okay, so now we're getting into 3:30. This is a new 30-minute candle, so it's a higher time frame candle. So you see it's still respecting this hourly level. This is what I like to see. The new 30-minute candle that opened up, it came down to pick up another pool of liquidity down here, and it closed very strong, like a strong hammer candle. But more importantly, we closed above the white hourly support. I like that. So I added another position, another buy. And I kept buying this uptrend where I believe I had 1, 2, 3, 4, 5, 6 buys, and they were all about half lots and standard lots. And then we started to get a nice bullish candle, 345. And what we were waiting for was maybe a pullback for a continued move at 4 o'clock a.m. Okay, and this is what we got. We got 345 up here, the pullback, and an extension at 4 o'clock. And we hit our 5-minute area where some snipers started to scale out, but then we were waiting for 4 o'clock as well for the next open candle, maybe to have that momentum to get up to that supply zone. But when it broke right there, then I started to scale out my positions because it was some really nice pips all the way from the bottom that we started to accumulate. You can see in the MT4, don't look at the German 30. That was right before market open. We took a German 30 sell, but the other ones were 1, 2, 3, 4, 5, 6, 7 buys on the US 30, and it was total of $1,400. But that's to show you guys how you can accumulate positions with the use of top-down analysis and use divergence as a confluence and give you the edge in the market. So guys, if you like these videos and you appreciate these videos, please like, subscribe to the channel, leave us a comment below on things that you'd like to see. So this was a video on how to accumulate positions. Remember, nothing in trading is guaranteed. This was a high probable setup by using all of the technicals and the psychology of trading to your advantage. But trading like this does have risk, so you have to manage your risk as well. So make sure you're using the proper lot sizes for your account with proper stop losses. And hopefully these videos can help you and help with your trading. And guys, we just finished the boot camp last week. So I apologize. I was going to post this video earlier, but we got very busy with the boot camp. It was a success. And guys, thank you guys so much for all the support. And thank you guys. We appreciate all of you guys. And we'll see you guys next week. Thank you.